Okay, folks, welcome to Friday, the 11th of March 2022. We're really seeing a pretty muted and quiet morning here in Europe. Not much scheduled on the data slate, but we are in this higher elevated sort of VIX environments here. So that does not mean because we have a quiet data slate, doesn't mean we're going to have a quiet day here. So what we've seen overnight is really, steady as she goes on the equities front. Upside seen into the close on the session last night. Um, and DAX holding on, for example, in Europe now this morning quite well onto the gains. So let's get over onto these charts and see what we can see here. Let's just go. Here we go. All right. So the euro, just rolled the contract on the futures on the euro. We'll just switch to a weekly here, and you can see that the euro is trying its best to get above 103.75 to no avail here this morning. And so we are weak here. I think we can come back down, test 09360s to the downside. And your top left of your screen here, you're seeing that level coming in just above S2 here. So I'm in position on this already. It's been a little bit of a rough ride as I've been in there a little bit too late, but I think we can mull around here this morning while the risk levels stay muted. Dollar, of course, rising here into the R1 and transitioning across this former gap area. 98.86 is on that high for the gap. The trade thesis here is really looking at the US dollar moving back into this line in the sand above, and actually the target, really the target is 100 spot fours, and parity is sought by or is touted by the ECB at this time, as in the near future we should get that. So that'll be interesting to see that happen. But really, that we're kind of a far way off at the moment of that happening in the euro. So looking across equities, you see Nasdaq on the front foot. All these US equities on the front foot right now. Here we are on the daily on Nasdaq, and it's looking very punchy. Small pullback yesterday. We seem to be now making gains towards these upper register prices at 13,879 quarter on the DAX. That is actually the high here from the 16th of the 16th of Feb 2021. If we go out on a weekly here on the Nasdaq, it's just going to take a second to load. We're kind of trading in and around this area here. So let's see. Really, the lows here are going to be the first stop. That's 13,706, which would be the low of kind of this doji week, 24th of the week of the 24th of Jan this year. But I think we can generally start to get up above here. But of course, it's all important that we push above and hold the 706s through this session. So that's us on the Nasdaq. Looking over at the ES. Let's get the daily on here. Couldn't really spend much time in this area below. This area below is nice little gap between significant low here on the 4th of May 2021 and the high here on the 10th of May. And so just a little bit of a zone there below. So we can take that off and we can see that the SPUs, it does look like it's ready for the push above 42.76 halves long to the 43.68 halves above, and the 200 EMA waiting for us above there. We could kind of put on actually some of these other moving averages, like the 20 EMA seems to be the best target on the upside here, 43.28 spot 88s. The Dow, we were looking at the Dow this morning, quite a few big hitter levels for this market right now. So on the daily, we're tracking quite a few levels. Probably best to go out on the weekly here and see what makes sense. And these levels still are relevant, so we're getting support in the 33.086s here. So far this morning, just a little pullback right there, right? And I think we can target 33.414s on throughout the rest of this session and beyond. To be honest, I think Do we have a fundamental catalyst for that? No, we don't. Do we have a Fed week next week and the roll on this contract coming up? Yes, we do. And I think, well, this market is priced in up to 5 rate hikes so far. So, 5 rate hikes, war, uh, you know, global disease. Um, these markets are made of Teflon. These markets are made of Teflon. Um, so yeah, look, I think push to the 20 EMA is inevitable. How long is that going to take? Well, probably all of next week. If we manage to hold above the 34 414s just above here, I think we stand a good chance then, getting back on up. So let's just put that chart to bed. Um, Gold now resistance on the 2000 marker, quite interesting here. That's our weekly chart. So you can see the 2000 marker. I'll make this a little bit bigger here. You just see that all that excess, right, so far above the 2000 marker over the invasion, of course. A higher risk environment. There's generally it feels like the market is generally pricing in a softening of the situation in Ukraine. But what we're hearing across all media sources, both from News Squawk, the guys who are definitely in the know, to AP, Reuters, is that that's not happening. The softening is not happening. So currently, I'm in the shorts on the 2000 here. Do I think that's going to survive for a pullback below 1921? The nines, I'm not sure, but right now I'm just trading what is happening, and there is weakness on the 2000. All right, so fit whatever story you want to retrofit onto that as you will. Right, oil as well, still receding back from its mega highs here. So $19 pullback here on the board on Wednesday. So more downside yesterday. We're currently on the bounce 1.7%, finding supports on the 106.14s. Now 106.14s, if we kind of go all the way back here, all the way back to 2014, I think it is. We're going back. Actually, I think this goes way further back than that. 106.14s. Yeah, it's just in this little notch of an area here. We can zoom in, right? And we can zoom in. And you can see here, this was the low, right? A multi-year low in 2011, right? Precisely, it was the low of the 4th of October 2011, Tuesday. It was a Tuesday. I remember it well. No, I don't. But you can see quite a big level, right? And a little bit of trade below both on Wednesday and this morning, and then just a bit of excess. Well, a lot of excess put in generally below this level. Buyers seem to like it, but really, if this market is kind of pricing in a softening of the situation in the Ukraine, which I don't think it should, and I don't think you should do that as a trader. And I'm not just saying that because I'm the perma bull. I just think, I just think a sneeze and a whisper could have this market back above up at 134s. So while you might want to be shorting 110.29s, I just don't like the sound of that. But technically that could unfold, and we could find ourselves down in the 20 EMA 102 spot 67s. Support below there 100 spot 54s. All right, so that's it on oil and gold. We've done the euro. Nat gas, we had news yesterday that the Nat gas infrastructure has come under control from from Russian forces yesterday. So that's the infrastructure in the Ukraine that pushes Russian gas across the country towards Europe. Those facilities have both come under the control of the Russian army, and the actual operators on those facilities are being held hostage, is what we heard from Interfax. So, with that level of risk, we have to be looking at upside here, right? And so, sure enough, holding support yesterday on the 20 EMA 4.554 as it is today. And just that general lift up there. Actually, that's behind my head. I'll just show you here in the 60 minutes. Generally finding that support in here. Some very clean activity for the value traders, and then of course lifted up into close around 4.670s. I think we can continue higher on this contract today as well. So um, that's what I'm seeing on that gas. All right, guys and girls, that's it for me for another session. Be good, and I'll be talking to you at 1 o'clock in the Discord room. Next week, we will be opening on Wall Street an hour earlier at 1:30 due to the change on the clocks on Sunday, I think. All right, take care. Bye bye.